As we have this conversation here at the very beginning of September, where do you see markets at right now? What are your on-chain analytics telling you?
Yeah, it's quite unprecedented right now. Like, we're, what is it, getting on our 12th year into this network. And for all of this, we've seen this very, cyclical behavior between bull and bear cycles every 4 years. The halvening has had a lot to do with it, where every 4 years the miners' reward gets halved, and therefore the amount that they sell onto the market is reduced by half, and that produces this sort of bullish impulse to market. So we're currently in this bull market coming off a halvening, and most people are expecting a bear market into 2022 because that's the cyclical nature, the 4-year cycle of Bitcoin compared to maybe a 10-year cycle for macro markets. But what's interesting right now is that we're seeing a peak kind of reaccumulation by long-term investors. And whenever you see this level of reaccumulation by long-term investors, it's usually the fuel to drive another bullish rally, of multiple months. And so as we come into the fourth quarter of this year, we expected a very strong rally, and then a blow off top. That's the normal expectation on the cyclical nature. But right now it's like, wow, the data is showing that the structure is completely different from every other cycle. And if it's correct, then this bull market is not going to end end of this year. It's going to go well into next year. And potentially, there's a lot of evidence now I'm seeing quantitatively with this data to show that 4-year structure is breaking down. So we were locked into this kind of 4-year cycle, and perhaps now we're breaking free of the gravitational pull of this halvening impulse, and the demand and supply from investors and all the parts of the ecosystem are more predominant. And so in that regard, we might just continue to run up with these, typically 50% pullbacks, which isn't much of a pullback if you've been in Bitcoin long enough. We're used to 80% pullback over a year. And we just had one of these 50% pullbacks, and a consolidation of just barely over 2 months, and then we're off to the races again. So I could totally see that being the behavior of Bitcoin in the coming years, where we do this kind of random walk of price discovery as it finds its price at network saturation, where everyone's using this network. So yeah, that's the most interesting thing right now to me.
Yeah, Bitcoin once again above over 50,000 here today. You talk about this as a very bullish outlook that you see, this kind of off to the races framework that you see as a setup. Give us a little sense, Willy, beneath the surface, what are the metrics that you're looking at to determine this, and how are you extrapolating that view?
Okay, it's a really good question. I mean, when I look at the network, there's so many different metrics you can look at, and they all get used in different parts of the cycle. And currently, the most reliable metrics are all the views into demand and supply, both locally and in the macro sense. So, I'm looking at a chart right now in front of me, and it's looking at what the long-term investors are doing. And so, for example, I work with Glassnode, which does the raw on-chain data, and they process it, and it's a service that many people can use. I pull that in, and for example, they do a metric called liquid supply, and you can look at the blockchain. You can see the millions and millions of addresses. There's multitude of addresses, and then they do the hard work of going, these addresses, who owns them? And they can cluster these addresses into what looks like entities, individual participants of that have their wallets spread across all these addresses. And then they look at the interactions between them and the historical interaction. And this metric is very, very telling, because they can categorize the guys that buy. They buy without selling. They're like 75% of their transactions are more Bitcoins coming in, very few leaving. And then they have another category, which is liquid and highly liquid. And those guys are more speculative. You look at their history, and they buy and they sell and they trade. We can kind of look at that movement between speculative hands and long-term holders. And obviously, as all the supply moves to the long-term holders, the guys that do not sell, you create a huge supply shock, and there's a shortage of coins left by the speculators, and the price just runs up. And so that's kind of like a demand and supply view using their historic behavior. And so that's one of my favorites. Another one is just share doing the same thing but much rougher. Like you say, anything in a wallet held by self-custody or cold storage, those are the coins you cannot buy, and the coins you can buy are the coins that are left on the exchanges. And you can run that ratio and you get the similar kind of metric, and that's demand and supply. Also, the supply is what's on exchanges, and the demand is that is held by investors who've got that locked away in cold storage. So those kind of metrics are the most telling and reliable.